Hi, and welcome back to the Global Treasurer's Future in Focus series in partnership with Standard Chartered. My name is Aaron Fronder, editor for the Global Treasurer. In today's episode, we will be focusing on the issue of faster payments and what support is available to treasurers to ensure frictionless payments can occur. Joining me for the discussion today is Joe Fraser, Managing Director of Standard Chartered's Transaction Banking Cash Product Team for Europe, and Mila Haga, Head of Digital Treasury and Banking at British American Tobacco. A warm welcome to you both, and I hope you're doing well this fine November afternoon. So, welcome.
Good to see you, Aaron. Thanks for having us.
Thanks for joining us. So, both of you, I'd like to start by asking, how are you defining faster payments? Because obviously the term, it seems to be something that means different things to different areas of the financial services industry. So what do faster payments mean to you both? Joe, maybe you could start with your definition.
Yeah, thanks, Aaron. Good question. Because faster doesn't necessarily mean real time. It could just mean faster than where it was before. But I think when we're talking about faster payments or instant payments, we are talking about payments that are near real time. So they're, roughly 10 seconds or around that time. And they are either a payment being sent, so it could be a payable, or actually in many cases now, it could be classified as a receipt or a receivable, where we are pulling the payment from somebody else. They've been around now for some time. I think for those of us in the UK, we know that it's been here for over 20 years. But outside of the UK, Standard Chartered is live in 22 markets. I think globally there is about 50 markets that are now live on a form of instant payment. So definitely an innovation that's taken off. I think we've also seen this kind of type of payment initially start with consumers, and we'll all be familiar ourselves with just being able to make a payment now and you'll receive it now. Over the last few years, we've also seen it move into the business and corporate space, and for corporates and treasurers to be using them also, which takes them to a different dimension. And then the other part I would say that typifies these payments, they're usually straight through process. They're irrevocable by nature, which can cause some concerns around fraud and the fact that you might have made a mistake and sent it to the wrong person. So they are irrevocable, they are straight through, and they are 24/7.
And Mila, anything to sort of to add, or is it, how does faster payments? How did you define it personally, working on the corporate side?
So I think on the corporate side, there's a lot of overlap with what's described from Joanne. I think we would look at it broadly in terms of, as you said, it may not be real time, but it is faster and it's taken away, or it's taking away where you may have certain barriers such as cut-off times and or a delay between when you would execute, say, the revenue recognition and the subsequent cashment dates, either inbound or outbound. So again, can be through a range of instruments rather than a specifically defined rail, but I would overlap a lot with Joe.
Sure. And obviously, just looking to build on both of those definitions slightly, obviously there have been a few developments within Europe regarding faster payments, obviously the introduction of PSD2 and open banking being one of them. If you were to summarize, or I guess another way to do a stock take of the faster payment landscape for our audience, how would you describe it to them?
Open banking has definitely changed the landscape when combining instant payments. And I know it's something you and I have talked about in the past as well. It's really seen the introduction of not just banks doing payments, but also third-party providers. And that's what the regulation really enabled, for other parties, not just banks, to be able to support customers with those transactions, or to work alongside banks with those transactions. That would probably be the first thing. The second thing I would add is what it's brought, which is I think really essential with real-time payments, is the API capabilities, or it's really accelerated the use of APIs, which modernizes the infrastructure that everybody uses today in order to receive payments and the information associated with it. But it also helps generate that real-time reporting that is an essential part, particularly in a corporate treasury team, to actually know whether you've received money. It's all very well sending and receiving money, but if you didn't know it was instant and that you've got it, then it was almost pointless in the first place.
Sure. And Mila, just from your perspective on the corporate side, anything to add there?
I would probably say, if I had to categorize or explain to someone, it's probably three main components. One is that it's quite fragmented across geographic locations in terms of what we really mean by real time. It's also fragmented in terms of the providers. So from a skill set and capability and understanding of who you're dealing with, it's no longer necessarily just a traditional banking partner with a banking license. It may be a sort of ecosystem of partners who are using rails with other third-party providers and needing to understand the risk and the setup, and who actually has the contractual obligation associated with that. And the third component, I think as well, that's kind of important, is understanding where that really drives the value. So from an industry perspective, you're going to hear a lot about APIs as an example, which is true. There's the modernization of, let's say, the historical infrastructure we've had, but it's the enabler of the outcome. So if I had to look at it in that way, it has modernized the infrastructure, but it's opened up other possibilities, or it's also requiring corporates to be really crystal clear about what they're trying to achieve and what else you need to achieve that is not specifically on the payment rails, and what else is the opportunity that moving to that payment method offers you, because it comes with additional aspects of that instrument or the way that it's executed.
Could I also just touch on that? You mentioned about how fragmented it is. Could you both maybe just talk about why it is fragmented and what is being done, or what could be done, or what should be done to kind of make it less of a fragmented landscape?
I can only imagine for the likes of Miller how difficult it is to navigate this. I mentioned that instant payments are in more than 50 countries globally, and Standard Chartered in 22. None of them work in the same way. So whilst they might have very similar standards, and in theory they are the same, they are all different, and they are all domestic by nature. Some of them have limitations on can you access them from overseas. They have various limits associated with them. So you could have a scheme that enables you to do, 10,000 euros or £10,000 or $10,000, or you could have something on 1 million. So trying to understand all of that by scheme, by country, particularly if you're working in multiple countries or paying out to multiple countries, is probably quite difficult. And that also links with the whole interoperability. They don't interoperate today. That said, there is a growing desire, and we've heard a lot of it talked about this year, in particular across the industry, about how do we connect these domestic schemes globally so that you can really have a true cross-border, frictionless, instant payment capability.
And Mila, do you have anything to add about that? I guess my question to Joe was, what can be done to kind of make the landscape less fragmented? Have you got anything to add? I mean, what are some of the kind of big pain points for you, and what are frustrations from your side?
Yeah, so again, I think it comes back to, speaking from our perspective where we are global. So one of the pain points that may arise for a corporate is that over the last, I don't know, depending on your journey as a corporate, over the X number of years, realistically, there's been the debate around, do you keep things in the end market or regional, or do you consolidate back into some sort of in-house cash arrangement, receipts on behalf, payments on behalf? And that's fundamentally based on the capability of your bank partners for the backbone of that in-house cash arrangement, the ability to be able to use or not use virtual accounts, etc. But at the same time, you've seen this demand at a domestic level, at many domestic levels, around how does a consumer, which has a lot of overlap with a corporate that's an SME, i.e. 5 people or less, the ability to execute payments or receive funds in a really rapid fashion. So you've ended up with domestically designed instant payments or real-time payments per need of a market. So if you look at Brazil, that was actually government required, that I think for any bank over 500,000 consumers, they had to offer PAX. So it started with the domestic banks first. That doesn't offer in the same way in Argentina or elsewhere, and it's really not cross-border. It's internally in Brazil. In Indonesia, again, it was government supported, where they wanted to introduce a national QR scheme so that you could do QR payments. Now that's again quite different than the UK, where again there was some regulation and legislation to ensure that the rails of the banks were available to the fintechs that sit on top, but it's a different scheme yet again. So when we ask what can we do to offset that, I think you're juggling a lot of competing objectives at a domestic level, and you're also potentially juggling the needs of a corporate that has cross-border versus the majority of these smaller payments, because, Joe mentioned there may also be caps. These fast payments are domestic, and they may be domestic to domestic. So is there going to be a need over time? And I think it's happening in Africa a little bit. I believe there's a project called Switch, sort of Pan-African, around looking at how some of the wallets come through the central banks, expecting there to be sort of congruence in each of the African markets where they share, where it's relevant. Cross-border's a period of time away for that, as an example. But do you end up with some sort of banding together and scheme, the way SEPA came along, 20 years ago, to say, here is a standard of how we can do this so that it is interoperable across jurisdictions.
Sure.
Whereas at the moment, you can have amazing options each in market, but being able to roll the same thing out in exactly the same way. So you've built a very central platform, you've built a very central backbone for your treasury, and what you may have to end up doing is introducing a lot of local solutions, which you may be set up to or have the capacity to manage relative to your current OD structures.
Yeah.
Sure.
And I think where banks are trying to help Aaron on that point is to remove that friction or fragmentation or the visibility of that to clients. So, for example, a client should just be able to submit something to a bank that says, these are all the payments I want to make or I want to disperse across all of these countries. End of story. They need to be there by this date. You kind of choose how to do it. And, what we do in the background is then work out where are they saying, how are they saying, and almost the scheme, the rails in the background becomes irrelevant for the corporate. So I know that's where we are kind of aspiring to do across a number of markets, and we already do that in a couple of markets like India. So we can already do that kind of cross-border transaction and disperse into India, into an account there using real-time payments. And so in theory, Mila shouldn't need to even think about it, but we're quite a way, I think, as an industry at joining all of that up still.
Yeah. So we've kind of touched on there about obviously what some of the challenges are to making faster payments a reality, and also what kind of banks are doing with their corporate clients to make faster payments a reality. But I guess turning to sort of specifically the treasury industry then, I mean, what are some of the core benefits of faster payments for treasury teams? Mila, could you kind of give an overview of that? Like what's up for grabs really if we can access faster payments?
Yeah, so some of obviously there's the treasury cases, which we can discuss in a second. I think it also there's a benefit for treasury just as a business partner within a broader corporate context of how we can further support objectives within a trade cycle or within a payable cycle. So if we think about trade, if we're able to receive and get instantaneous confirmation of that payment, then potentially able to increase the flexibility you have with regards to release of credit checks, as an example, stock issuance. So you've actually sped up the sales cycle, because otherwise what you're waiting for is confirmation off the back of the bank statement, depending on how you've actually structured this, which could be T1, T2, depending on the end market and depending on the payment method. So your consumer or your customer can tell you they've paid, but I actually don't have evidence of that until I'm getting a bank statement today. Whereas if I can actually get a notification that it is confirmed, it is non-challengeable, we can release the stock right now. As an example.
So and again, to build on to this, lead on to my next point then, I mean, obviously, so in order to enable frictionless payments, what is needed from a treasury standpoint? So what challenges do teams need to overcome? So again, Mila, if you could sort of shed some light on that.
So for me, I think it's also understanding what the use case is that you're actually trying to achieve. Because again, you can say, hey, look, we've got faster payments, but unless you're actually adding value or resolving an issue, you're just adding something else that you're never going to get the benefit from. So the challenge there for the treasury teams is to have that really strong relationship and understanding of the underlying business models that this fits into. So again, if we take a trade cycle example, if today you might have telesales and it might be an EFT payment, we'll say cash collection, the way that you get visibility of how that customer paid has a certain amount of technical integration, and it actually impacts how your distribution network might work, because you need to get confirmation of payment, as an example, to pack into a truck, and you may have agreements with your secondary supply chain provider. So if now we're getting into instant payments and it's almost more throughout the day that your customer expects, well, I paid you, I want the stock back out, and maybe you as a corporate want that stock back out, what does that do to your agreements on your secondary supply chain? Is it some sort of Uberization, essentially, on how you're going to do logistics, because you've actually opened up the line of credit I can take again and I want to ship today? Because with the expectation of faster settlement, there is an expectation from your customer and consumer about what benefit that brings them. So that's understanding how that works. I think you also need to understand in the back end what this means, that if you're receiving cash right now, there's going to be the trade view of the world, depending on how you may have your trade system set up. And then there is a treasury view of the world of, do I have cash available right now to do something with? Because in some regards, from a treasury perspective, it's all very well to say that I had a faster receipt, but if I can't see it to do something with it, then from a treasury perspective or that cash management perspective, you've actually undermined some of the benefits case. So there's also the need to understand what additional reporting, integration, or change in process that you have on, say, on the liquidity side or the settlement side about what you're going to do with that cash once you get it, and once you're able to actually understand what you need to do to see it in the first place.
And so obviously, Mila, you've touched on kind of what the challenges are for treasury teams. Turning my attention to you now, Joe. So there are obviously a number of solutions that are being developed to support treasurers and their teams to overcome some of the issues that Mila's obviously mentioned. Could you discuss sort of how Standard Chartered is helping its clients, and maybe even Mila specifically, actually?
The reporting is a really, really important aspect of it, and making sure that there's visibility there. The second thing is around that liquidity control, and it kind of works both ways. So whilst you can use real-time payments for to your advantage, you can, do a almost just-in-time payment, wait till the end of day and send those funds. So you've maximized your liquidity position throughout the day. You're also going to be unable to control to the same extent your receipts. So, whereas before you could almost by the clock work out, you knew that you'd have funds in your account in the morning. That doesn't necessarily happen now with real-time payments, and because they're 24/7 by nature, they're hitting your account all of the time, and having visibility of what's in your account, being able to reconcile against that, and marry up to potential important transaction that Milla's just talked about is also important. And working out what you do with your liquidity. Are you going to be sitting on a load of liquidity that's come in on a Friday and you've kind of passed the point of being able to do anything with it to maximize your position over a weekend? So that would be another aspect. And then they can be used for emergency payments. We see that now, particularly around employment, employee payroll. But equally, it can also go the other way. So if you wait until last minute in the day to send a payment and it doesn't work, then your ability to have a backup is also not there. So there's like so many. There's two sides of every coin almost, and there is a big change operationally for everybody involved in this. So, within banks, within the treasury teams, within the business, I think, with central banks, the whole management of this money and the fact that you've got 24/7 movement of money just creates a fresh set of opportunities and challenges.
Yeah. Well, I was just going to add to that and say, I think the other aspect is, I talked about the centralization of treasury operations, let's say. There's also been in a lot of corporates the centralization of shared services from a finance perspective. And there's usually on around the clock, allocation of, let's say, flows. So now if you're moving into real-time payment, and even if it's not real-time, you may have been moving into e-commerce during the whole, COVID period. It raises some really interesting points around cutoff and who is doing what for which jurisdiction when. So if you think historically back in time, we've got a cutoff point for SWIFT statements. So now you've got something that may be outside the cutoff time for the SWIFT statement, but it's still within the same trading day from when you might record it financially. So it's working all those things out and then understanding, okay, how are you actually going to manage this operational basis?
Yeah. Just and again, thinking about how we support clients. Part of it is, first of all, understanding the use cases, and actually that's one of the things that we've been doing with Milla, and seeing where we can support in different jurisdictions, because it's not it's not for everyone and every single type of payment that you ever do. So you need to find the real opportunities. You can be doing it around employee payments. We've seen clients doing it to offer rewards and incentives. Somebody does something, here's an opportunity to do a real-time payment because I can pay you now. We've also seen it when it comes to government payments, tax payments, where there is also a time criticality to it. I know that's something that is definitely relevant for Mila as well. And we've seen it on that kind of e-commerce cash on delivery. And, we've worked with a number of clients in delivering e-commerce solutions, for example, using our straight to bank pay capability, which we offer in a number of markets, which means you can collect a payment real time using QR codes. You can do it with wallets, and that really helps the business having an e-commerce kind of marketplace set up as well and getting funds in instantly.
And Miller, is there any other things? I mean, I guess if you could touch on maybe how Standard Chartered does help you. I mean, obviously Joe's touched on a few of those things, but how is that partnership helping you overcome some of the challenges that you'd outlined?
Well, I think specifically if we look at Standard Chartered, I think this is where the team have geared themselves around the shift in the market. So traditionally, some of the bank partners will be very, let's say vertical in terms of his transactional, his cash management. So this is really sort of going that horizontal and saying the use cases that we're trying to solve here based on payments, whether they're inbound or outbound, actually requires a number of people from different departments within our bank partners and also within the corporate. So that's one thing is that they've recognised that and sort of shifted the way that we engage to have those conversations with the right people in the right room once, if that makes sense. The other way that they're supporting us is that it is early doors, but as a corporate working with the partner, what is the input that we can provide to ensure that the design of the product, the process behind it, the concepts are there as we need them. So it's not a case of passively waiting for a product to magically arrive and then sort of discussing the commercials on it. It's being an active participant up front in how your partner is actually going to design the offering and then go to market with it. And the other way of supporting that would be based on the markets that we share a footprint in. What are the cases that they can see based on the behaviours on our receipts or payments going out now? And, embedded in us in terms of our end markets and understanding how we work, not just with our own entities, but say our distributors, our customers or vendors, because there may be a banking network discussion going on there. And it's then working through to say, right, so if this is the opportunity you want to leverage, or this is the challenge that you've articulated, let us help you get the right people in the room, work through what that is, and then design that out. So I think that's a slight shift because it is, again, this sort of new area,
Sure. And obviously, I mean, the challenges that you've both outlined obviously mean that the move to faster payments could seem daunting for some treasury teams. What would you say that they risk by not capitalizing on the opportunity that's being presented to them, though, at the moment to act now? And Mila, maybe you'd be in position to kick this off.
So probably there's three main things. One is that because it is new for some of the bank partners, is being at the forefront with them around that design. So for me, being inside the tent and helping the design and being an active participant, that's an opportunity you may forego as the product starts to solidify, if that makes sense, because changing something that's now being offered is, to be fair, is a bit of a harder discussion than, okay, how do we design this first time round? The other aspect is, and generally speaking, probably from a general corporate perspective, is quite a few corporates did a lot of investment in traditional ERP systems, let's say a good 10 years ago, 8 years ago, 5 years ago, and there's a refresh going on, generally speaking, in the industry now as people move towards either more agile frameworks, sort of less or disaggregated platforms again that are sort of more niche and specialist, or even the case of when you're having to refresh the version of your system. So again, now is an opportunity to have that conversation of what is the best way for me to technically integrate that gives me leverage at the same time as, faster payments coming along in the industry. And then the third point that you may miss out on as an opportunity would be able to go sort of as an early doors adopter to be able to differentiate yourself for both your vendors, which you might, be a significant contributor to their working capital, or your customers in terms of the ability to speed up their trade cycle. So that would be sort of the three main things for me.
Joe, anything to add from you?
Just a couple of things. One, the obvious one around just you could be potentially optimizing your cash better and having that working capital just in time cash flow better, which probably now more than ever is a critical requirement. So this is a tool that can enable that. And secondly, just again picking up on Milla's point, and I think Milla does this brilliantly in her role. She's so embedded into the business, and this is one capability that a business can really benefit from in driving sales and revenue, which again now more than ever is a critical part of our survival. So it is a bit of now or never. There is so much innovation, there is so much competition out there. Business models are really changing. There's new parties coming in, and now is the time to really capture the opportunity. And if you're doing some kind of transformation, now is the best time to think about it, because you can configure and get the right technology in at the outset, and you can work with your bank to do that. And we're really keen at Standard Chartered to support clients on that journey and shape it with you, as Milla's just talked about. But if you don't do it now, then you are potentially going to be losing out. Everybody wants everything real time, and if you can't deliver everything now real time, then you're potentially going to suffer as a result.
Yeah, I mean, you've obviously said now or never. Obviously, that means that faster payments should be now or never a topic at the front of mind for all treasury teams. And for those that are embarking on change, I guess my final question to you both is, what will treasury teams need to ensure that they align themselves with the rest of the business, though, as they embark on this journey? Joe, any thoughts from you to kick that off?
Well, I think the obvious assumption is that you will align yourself with the business and not just try and do it yourself, because it probably won't work if you just try and do it as an individual team, because invariably it requires probably investment and a broader transformation. But you can really, I think, drive value with the rest of the business by suggesting this and taking it forward as part of a business transformation, not just an individual treasury transformation.
Sure. And Milla, how have you kind of done that in sort of real terms?
Yeah, so one thing I would sort of just say to caveat is that I think when Joe says now or never, just to be clear, it's not that you can't have faster payments in the future. It's more about whether or not there is a natural inflection point happening in the industry at the moment, both from a banking partner perspective, technology enablement through, again, that ecosystem of partners, and what your consumer, customer, and vendor basis expects. So that's, I think, what you mean about now or never, is like it's the perfect storm to capitalize on it.
Yes.
I think as a corporate, we like to be at the forefront, but we don't necessarily want to be bleeding edge. So in real terms, it's looking at where there is a real value case for it and not doing this for the sake of doing it. And then really understanding and picking your partners well that either have a proven track record already in that market, or where you've got a really strong relationship that you can help influence based on what you actually need to get out of it. So have a look, obviously, at where it makes sense for the investment. Have a look, as Joe said, is something already happening within the business that prompts this? So as an example, irrespective of whether it was faster or not, in some of our markets, there's a real drive to physically decash. Now, if I'm going to spend £5 to put in electronic payment methods that support our sales staff, then I'm going to spend the £5 in the best possible way, working in partnership with the end market that makes it fit for purpose in the longer term and also gives us additional benefits.
Joanne, Milla, thank you very much for your time today and offering your insights into how treasurers and their teams can make payments as frictionless as possible. Thank you. Thank you for your time.
Thanks, Aaron.
Yeah, so obviously, sadly, though, that is all we have time for. For those eager to watch more video content or simply looking to access information on the latest emerging trends impacting the Treasury function, please visit the Global Treasurer online. Thanks for watching, and until next time, goodbye.